I am AI Avatar of CA Ratan Mundra. India is witnessing a major shift in how maritime risk is managed, especially in times of geopolitical uncertainty. Public sector insurers, led by GIC Re and New India Assurance, have come together to form a strengthened Bharat Maritime Insurance Pool. This pool has already crossed commitments of $100 million, signaling strong domestic participation. What makes this development more significant is the presence of a $1.5 billion sovereign backstop, which adds credibility and financial strength to the structure. This is not just an insurance initiative. It represents a strategic move to ensure that India's maritime trade continues smoothly even when global markets become unstable. To understand the importance of this development, we need to look at what triggered it. The conflict in West Asia created significant uncertainty in global insurance markets. International reinsurers, who typically provide large-scale risk coverage, began withdrawing or restricting their support. This created a serious gap, especially for routes considered high risk. Indian shipping companies, exporters, and importers suddenly faced difficulties in securing reliable insurance cover. Without insurance, ships cannot operate, cargo cannot move, and trade finance becomes difficult. This withdrawal exposed a structural dependency on global markets and highlighted the need for a domestic solution. The Bharat Maritime Insurance Pool is essentially a collective risk-sharing mechanism where multiple insurers come together to provide coverage under one coordinated structure. It includes around 20 contributors, with GIC Re acting as the largest participant, followed by New India Assurance and other insurers like Oriental Insurance, United India Insurance, and Tata IG. Instead of each insurer taking risks individually, they now participate as part of a pool, sharing both premiums and losses proportionately. The presence of a sovereign guarantee strengthens the pool's ability to handle large claims, making it a credible alternative to international reinsurance. One of the most important aspects of this pool is its comprehensive coverage. Maritime operations involve multiple layers of risk, and the pool addresses all major components. It covers the vessel itself, ensuring protection against damage or loss. It also covers cargo, which is critical for exporters and importers who rely on safe delivery of goods. In addition, it includes third-party liability under protection and indemnity, which is essential for covering legal and operational risks. This holistic coverage ensures that the entire trade chain, from shipowners to cargo stakeholders, is protected. Earlier, India relied heavily on global insurers and reinsurers for marine risk coverage. When those players withdrew, the system became fragmented and unpredictable. Companies had to negotiate individually, often at higher costs and with limited success. Now, the new structure changes that completely. The pool provides a centralized, structured mechanism with defined capacity and clear participation rules. This transition from dependence to self-reliance ensures that India has greater control over its maritime risk exposure and trade continuity. The sovereign guarantee is a key pillar of this entire structure. Without it, the pool would struggle to match the scale of risks typically handled by global reinsurers. The government's backing improves confidence among insurers, policyholders, and financial institutions. It assures the market that even in extreme scenarios, claims can be honored. This not only strengthens underwriting capacity but also improves acceptance of policies issued under the pool. In effect, the sovereign guarantee transforms the pool from a commercial initiative into a strategic national instrument. The pool is supported by strong participation from both public and private insurers. GIC Re leads with the highest contribution, followed by New India Assurance. Other insurers like Oriental Insurance and United India Insurance have also committed significant amounts, along with Tata IG. This diversified participation ensures that risk is distributed rather than concentrated. However, it also means that certain key players hold a larger share, making their role critical in governance and claims management. The strength of these contributors determines the overall credibility of the pool. The impact of this development extends across the entire trade ecosystem. Shipowners benefit from improved access to insurance, allowing them to continue operations without disruption. Exporters and importers gain confidence in sending goods to high-risk regions, knowing that cargo is protected. Banks and financial institutions also benefit because insured shipments are easier to finance. Overall, the pool acts as a stabilizer, ensuring that trade activities continue even in challenging geopolitical conditions. From a broader perspective, this pool represents a strategic move towards self-reliance. By reducing dependence on foreign insurers, India gains greater control over critical trade infrastructure. This is particularly important for energy imports and exports that rely on sensitive maritime routes. The pool also helps build domestic expertise in handling complex marine risks. Over time, this could strengthen India's position as a significant player in the global insurance and reinsurance landscape. In conclusion, the Bharat Maritime Insurance Pool is more than just a financial arrangement. It is a strategic framework designed to protect India's trade interests. It ensures that even when global risk appetite declines, domestic mechanisms can step in to maintain continuity. However, its long term success will depend on disciplined underwriting, proper pricing, and strong governance. If managed effectively, this pool can become a model for handling geopolitical risk and ensuring resilience in global trade. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling complaints, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.